This is Bazaar Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. It's a truncated week. 3 days to go for the long weekend. It's a Tuesday morning, and we are basically waking up to not so great global cues from overnight. The US was slightly lower. I'm Prashant, with me, my colleague Sonia and Nigel. Guys, hi, morning.
Hi, I love how in this week every day you remind us how many days to go before the weekend begins. But yeah, it's been good for the market, right? Holding steady at the 22,400 mark. Lots of money coming in from domestic institutions and lots of cues to watch.
Well, that's right. And it's beautiful weather here in Mumbai.
Yes.
It's chilly. I don't think it's been so chilly. Prashant, I'm sorry, I'm a Bombayite. But I haven't seen
the sweaters are out.
This sort of chilly weather I've not seen in Mumbai. And the other point is, guys, which asset class is not doing well? Bitcoin is making fresh highs, gold is making fresh highs, stock markets are doing well. Where's the pain?
It seems...
Real estate is doing so well.
It's a little worrying.
It seems all too familiar. It seems like 2021 deja vu, right? Everything is up. It's like this broad reflation which is playing out. And you're absolutely right. Bitcoin, by the way, is the best performing asset class in 2024 so far. So I think that tells you a little bit about what's going on.
Prashant, when you relate these moves, I sometimes get worried that you'll talk about 2008. At that point of time, I was chilling it, but you stopped at 2021, so it's cool. It was good enough.
Nobody wants to remember 2008, right?
Absolutely. Well, let's just quickly recap what you need to know as we begin another trading session. And I'll start with where we left off yesterday. Where we left off was on a very, very quiet, somber note. The Nifty was, for most parts, doing nothing. There were only very feeble attempts at a bit of a recovery, 40, 50 points in the Nifty. Actually, even that by the close did not materialize. The small cap index, though, was down 0.5%. So that is something to keep note of. And I've been making this point for the last few days that slowly but steadily in many stocks, a little bit of deflation, is happening. Air is going out in many pockets here and there. You're not feeling it because it's not broad-based, it's not coming with any ferocity, but stocks are giving up. For example, the market breadth yesterday was negative, some 2:1 for a Nifty, which was actually absolutely flat. More on that point a little later, but overnight, US equities, as I said, were a little lower. S&P was down about 0.12, the Nasdaq was down about 0.5% or so. So you had this new comment, right? There's always something new with Fed speakers. So Fed's Bostic basically suggested that the first Fed cut could be followed by a pause. Now, there is a lot of question mark in terms of when the first Fed cut will be. And now we're saying somebody at the Fed who's a voting member saying that, well, you may get one cut, but it's not as if it's going to be a series of cuts. Whenever that first cut happens, it perhaps will be followed by a pause, reassessment, and then the Fed will decide what to do. Yields perked up on the back of it. The 10-year was up about 4 basis points, 4.2% or so. By the way, the 2-year also moved up a little bit. Actually more than the 10-year. Oil prices, they fell nearly 1%. We are at about just under $83 a barrel. And for commodities, China is important. And in that context, today, the Chinese National People's Congress, the NPC, it's a big annual affair in China that will begin. And I think the only thing which financial markets are interested in is if you'll get a strong signal about what the authorities can do to reflate China. The problem, of course, there is general deflation, especially in the property sector. Nifty, just to kind of sort of recap some of the levels, not very much different from where we put out yesterday. Nifty is headed towards the 22,500 kind of levels. 22,538 is the Fibonacci extension. The support comes in at about 21,966. Because of the big gap, 350-point move on Friday, supports, of course, have fallen behind. The Nifty Bank inched higher yesterday. It broke the swing high of 47,363. We left off at 47,456. It can head to 47,750 in the near term, in the short term. And supports come in at the 40-day exponential for the Bank Nifty, which is 46,425. And then the 20-day, which comes in at 46,351. So maybe once again, perhaps a little quieter on the indices, frontline indices. That's the GIFT Nifty for you. But so many stocks perhaps will be in focus. There is Tata Motors, there is IIFL Finance, there is, of course, that insurance story that we spoke about. There are hospital stocks. So it's a very stock-specific kind of action that I think we are going to witness once again this morning. Sonia.
Oh, absolutely. And, let's put this into perspective, right? The Nifty has been doing very well, not just today, yesterday, but if you map the trajectory in the last 1 month, I mean, now, of course, the Nifty is holding firm at the 22,400 mark, but it's been a 600-point rally that we've seen, 630 points to be precise, in the last 1 month in the Nifty. So we've covered so much ground, both in terms of price action as well as the kind of money that has been coming into this market. So look at what's happening with the domestic institutions. Just in the first 3 days of March, domestic institutions have bought 7,300 crores in the cash markets. And where is the money being pumped in? To a lot of stocks that have been seeing huge gains. So Tata Motors, for example, of course, you had that big news flow yesterday that Tata Motors has finally demerged its passenger vehicle and commercial vehicle business into two separate entities. But a lot of analysts believe that a lot of this perhaps is already in the price, because if you look at what's happened to Tata Motors, the performance in the last 1 year, JLR margins, for example, in FY22 were 9%. Now in FY24 have risen to 16%. Also, Elara Capital put out a note where they said that large part of the re-rating for the India passenger vehicle business for Tata Motors was accounted for post the TPG deal for the electric vehicle company. So yes, this news flow is positive, but perhaps a lot of it is already in the price. We'll wait and watch today. A couple of other stocks in focus, Macrotech Developers. I mean, the entire real estate space has been surging, and now sources indicate that there could be a 3,300 crore QIP from Macrotech Developers. IT stocks could be on the back burner today because CLSA has downgraded tech stocks like TCS and HCL Tech to a sell from an underperform. That would be interesting to note. Keep an eye out on these stocks. And, as Nigel was also pointing out, all asset classes are doing well. Gold has now, I think, gone over 63,000 rupees per kilogram. So watch out for that. And Bitcoin has surged past $67,000 for the first time since November of 2021. It's very close to all-time highs of $69,000. And in April, there's a big event that's coming up, which is called Bitcoin halving. It comes once in 4 years, where the supply of Bitcoins are halved, because of which the demand-supply skew causes a rise in the prices. There's also the Bitcoin spot ETF that was launched, and that saw big inflow of money. There are now talks of the Ethereum spot ETF coming into play as well. So all of this is causing this asset class to come back into action. But overall, for our own markets as well, looks like the run has been good.
Well, that's right, Sonia. The run has been very, very good. And for the Nifty in particular, because the Nifty has done very well in the last 1 month, as you pointed out as well. But what's not doing so well is the small cap index. And the last 1 year belonged to small caps because they gained big time. Now, in the last 1 month or so, there's a relative underperformance that's coming in from the small cap index. And yesterday as well, you saw a couple of stocks that moved up, to a great deal. But delivery-based buying really wasn't there. So there appears there was some short covering. There was some speculative action as well that continues in the broader market. So for the month of March, the sense you get is maybe it'll belong to the large caps and not the small caps. What do the FIs do? Well, the swing factors close to around 10,000 contracts. They added 5,000 longs and they covered 5,000 shorts. So if you pull up the chart, you'll see, in the last few sessions, from more than 60,000 net short contracts, that's gradually come down to around 50,000 short contracts. So some bit of some covering has already taken place, and the swing factor has already taken place. And yesterday, it was to the tune of close to around 10,000 contracts. What about the options data? There appears there's a short straddle at play at around the 22,400 mark. What's that? You write the call as well as the put of the same strike, and you pocket the premium. The premium is roughly around 250 rupees. So it appears the near-term range, that is the expiry that will pay out on Thursday, it should be in this vicinity of this 500 points approximately, because you take 22,400 and you deduct this 250 and you add 250 as well. So that's how you get the range out there. That's on the Nifty. On the Nifty bank, yesterday it came to that crucial, resistance level. But I would like it to take out this mark decisively, because the last time around we went to around this 47,500 odd mark. We couldn't decisively conquer it, and then we did see a bit of a pullback. The 50 DMA, that's far away from here, but in case you want a reference point on the downside, that's one for you. The Nifty Financial Services Index as well plays out at the weekly expiry, so keep an eye out on this index. Second half of trade, it could be fairly active. It's a Tuesday. You normally have, the weekly expiry that plays out for the Nifty Financial Services Index. The stock that I'm tracking today, two of them. One is Muthoot as well as Manappuram. Why is that? Because RBI has, pressed the brakes on IIFL's gold lending. So that's one factor. The second factor is that gold prices itself overnight were making fresh highs. So that's what helped sentiment as well. And I'll keep an eye out on both these two, because now the opportunity could be there. And for Muthoot in particular, the yield that they take is close to around 18% approximately, which is similar to what we see on IIFL's gold finance book. So keep an eye out on both these two stocks. The uptrend is pretty much intact, but I think in the near term, maybe the Nifty could be in that range of around 400-500 points out, guys.
All right, thanks a lot for that. So lots of stocks in focus, right? On the equities front, we have Rhythm Desai of Morgan Stanley, who says that Indian equities have fundamental support, albeit the valuation arguments persist. He says the market could always correct, but they expect bids at lower levels. He says the bull market will unlikely end without signs that fundamentals are worsening. They are overweight financials, technology, consumer discretionaries and industrials, but they are underweight other sectors. That said, Rhythm adds the macro trade could peak in the coming weeks.
Okay, well, some money market views. This is Abhishek Goenka of India Forex and Asset Management, who says that net FPI flows into debt has been positive in all 11 months of this year. He says overall sentiment is upbeat post better than expected December quarter GDP. He adds there is optimism around revival of private capex. He says we may continue to see a steady stream of FPI flows into domestic debt and equities if global risk sentiment remains stable. RBI continues to play a very active role in both spot and forwards, resulting in rupee remaining extremely range-bound. And he's expecting rupee to trade between 82.5 to 83.2 to a dollar in the medium term.
Okay, and on the bonds, Vishal Goenka of IndiaBonds.com says bond markets will remain in a narrow range given lack of any imminent economic data. He says volatility in the US and EU government bond markets have significantly subsided as well in the past month. He says, as we are in the last month of the financial year, do not expect any major directional move in bond yields. He expects the 10-year benchmark bond yield to trade in a range of 7.04 to 7.09% today.
Well, we've got a lot of stock-specific action to track for you. We get to that in just a bit in our special Top 10 segment. We're looking at Tata Motors, Macro Tech, AU Small Finance, BEML, Mishra Dhatu, and Z. All of them will be reacting to positive news. But on the flip side, you have IIFL Finance, DCB Bank and Bharat Forge that will be reacting to negative news. And you have some news at the bottom of your screen as well. Godrej Properties, they have been declared the highest bidder for a land parcel. So keep an eye out on that one as well.
Absolutely. Well, we'll get to many of these stocks in detail in a bit from now. Harold van der Linde is head of Asia Equity Strategy at HSBC. Harold, great to have you with us here on the program. Thanks very much. Just to kind of start with what's happening in China, do you think we'll see a firm policy put coming through, some policy announcements, etc., with this big MPC, which kicks off today? What's your sense?
I'm not quite sure. So, yeah, the Chinese market needs confidence to come back. And there's a few ways this can happen. And a lot of people hope, of course, that this National People's Congress will provide some of that confidence. Now, I understand that some of the GDP data will be announced today. It looks like they're talking about 5%. How they're getting there is something that we need to know. Unfortunately, the press conference with the economic czar in China has been cancelled, so we don't get a lot of details there. But I think maybe sometimes markets are putting too much hope on these large events. The other way how we can actually get some sense of confidence coming back in China is simply through the earnings season. We are in the midst of earnings season. By the end of this month, a lot of companies need to have announced their results. So we need to see that decent earnings are coming through, at least better than expected. Not the levels of growth that we see in India, but at least something around maybe 13, 14, 15% earnings growth in last year. Because we still don't have the 2023 numbers in. So that's something we need to look at as well. But for the moment, all the eyes are on the NPC. That's correct.
Okay. Harold, hi. Good morning. All the eyes also are on the Indian equity markets that are sitting at all-time highs. And, it is a bit disconcerting when almost all asset classes are sitting at new highs, right? Would you be a bit concerned at this point in time, or do you think that the run could continue, in Indian equities at least?
Yeah, in Indian equity. So I think this can continue, but the pace of it probably is good if it slows a little bit. Now, what is encouraging, last time we spoke about what is the risk that if China rallies, the money goes to China, that it will come out of India. And I argued at the time, well, maybe it actually could come out of Japan. Now, what we've actually seen is that neither of these two things have happened. We've seen quite some money flowing into China over the last, say, 4 or 5 weeks or so. That money has not come out of Japan, neither out of India. It's actually come out of other markets around the world and gone into Asia. So India is being separated from China. That's one good thing. So it's not being used as a funding base for China. The other thing I think is also healthy in India, and we spoke about this last time as well, we saw a lot of small cap stocks rallying, and we see in India that is losing a little bit of steam. I think Nigel was talking about it earlier as well. Now, that I think is also healthy development because the value lies in the large caps, not so much in the small caps, I think. And we need to see a bit of that rotation just to balance the market out. What we now need to see is that growth in China will be okay-ish, that some kind of confirmation comes there. And we need to see throughout this year that interest rates in the US are going to gradually move lower. And I think you guys were talking about it earlier as well. The Fed is saying, hey, they might cut, but maybe we put it on a hold afterwards. So there's a bit of discussion about that. But if we see these interest rates slowly go lower and bond yields slowly, gradually lower, that will provide support for equities in general and Indian equities as well. So I still think, yes, India is a bit expensive. Maybe we shouldn't see a big rally from here anytime soon, but we see macro globally as well as the dynamics in the market fairly healthy, actually.
All right. Hi, Errol. Morning and good to hear your views. From the large cap names, since your preference is out there in the Indian markets, what are you liking? And also the point that you made on the Fed. You know, we had a guest yesterday, Mr. Yardney. He made this point that maybe we don't get a rate cut in this year. I don't think equity markets are prepared for that. Your view on that as well?
No, if that would be right, if we don't see a rate cut this year, the market would have to reprice a bit. Probably not by a lot, but it would be a negative for the market because some rate cuts are being priced into global equities at the moment. We don't think, I think consensus is that there will be some rate cuts. But what we've seen at the beginning of the year that everybody said, hey, we're going to set rate cuts probably in March. That's then already being pushed backwards. And now we see the first voices saying, well, maybe we don't see a rate cut whatsoever because the underlying US economy is still doing pretty good. Our view is that we see some rate cuts, but a little bit later than what the market initially was anticipating. And you see this in bond yields, right? In the beginning of the year, they came down, they've gone up a little bit again. And I suspect they will slowly go down. And that would probably support global equities and Indian equities to a certain extent as well, but not a hell of a lot, not as much what we've seen the last couple of months. Now, when it comes to stocks you want to look at, I mean, we like the large cap stocks, so it's financials and maybe selected IT and consumer names there. But I think if the market trends higher, but not so fast, it's going to be individual stories. And we see this in other markets as well, Japan and Korea as well. It becomes increasingly on individual stocks where something is happening. Now, you have some corporate action in certain stocks in India. That's where the action is going to be done.
All right. Well, yes, that is where the action is at the moment, especially names like Tata Motors, etc., that we're going to talk about in a while from now. Harold, thanks a lot for joining in. Let's take a quick break. On the other side, our list of top 10 stocks is lined up with our entire research team. Stay with us. Welcome back. Well, we're going to talk about all the big stocks today, and Tata Motors, of course, will be on our radar. Now, this is a big positive for the company, the fact that they have finally demerged their listed entity into two separate verticals. The demerger will result in two separate listed companies housing A, the commercial vehicle business, and B, the passenger vehicle business, which includes PVs, EVs, as well as Jaguar Land Rover. Now, all shareholders of Tata Motors will continue to have identical shareholdings in both the listed entities. Now, the company says that this demerger is a logical progression of the subsidiarization of the passenger vehicle and EV businesses that was done earlier on in 2022. It was just a matter of time before this demerger would happen because there are no synergies between the commercial vehicle and the passenger vehicle business. Now there will be considerable synergies to be harnessed across passenger vehicles, EV as well as JLR, particularly in the area of electric vehicles, where not only is Tata Motors gaining market share, is the market leader, but they're also making significant investments over the next couple of years. They're also looking at autonomous vehicles, vehicle software, and this demerger will help them focus more on their passenger vehicle business and enhance value for shareholders. Now, the NCLT scheme of arrangement for the demerger will be placed before the board in the coming months. And in terms of a timeline, the demerger will take about 12 to 15 months to complete. But a lot of brokerages believe that a lot of the good news about this demerger, whether it's the growth of the JLR business, whether it's improvement in passenger vehicles, has already happened. If you look at it, the stock has doubled in the last 1 year. So maybe a lot of the news is in the price. However, I'm still going with green today.
Okay, all right. And for those that will be wondering what happens to the Tata Motors stock because it's part of the Nifty, well, the treatment will be similar to what we saw with Reliance when Jio went out of it. So you'll have 51 stocks for a bit, and then the smaller component, which should be the CV business, will make its way out. So Tata Motors continues to remain in the Nifty, and post the demerger, you'll have two entities for some time, and then the smaller one will make its way out. But let's focus on the other big news that came in late last evening. IIFL Finance as well as DCB Bank, both of them are in focus because RBI has wrapped the knuckles out there. Abhishek joins us to run us through all of those details. Morning, Abhishek.
Morning, Nigel. No, IIFL Finance could be stock of the day in terms of downwards pressure on account of the fact that RBI has directed IIFL Finance to cease and desist from any business in future with respect to gold financing. So RBI said that there is material supervisory concerns in gold loan portfolio of IIFL Finance. There are serious deviations in assaying as well as certifying the purity and net weight of the gold, which was at the time of sanctions as well as at the time of auctioning of these gold loans. There is breaches with respect to loan to value ratio as well. Significant disbursals and collections are done in cash, which is in excess of the regulatory permission that is being available. There is non-adherence to standard auction process as well. Lack of transparency with respect to charges that they are levying to their customers is also a breach over there. And regulatory violations with respect to significant and adverse impact on customers can also be felt. So with respect to the Q3 FY24 PPT, it showed that the gold loan portfolio was close to about 32% of the overall AUM and growing very rapidly at 25-30% on a YY basis. And it's a high yielding portfolio. 19% was the yield for 9-month FY24. With respect to DCB, they have also commented on this news of IIFL Finance. Bank's gold loan, co-lending agreement with IIFL Finance has started way back in August 21. Portfolio performance has been satisfactory and due diligence process gives them a reasonable assurance with respect to their portfolio. Someone's loss could be someone's gain. Keep on radar for investors would be Muthoot Finance and Manappuram as well. Back to you.
All right. Thanks very much, Abhishek, for that. Now, that's an interesting and an important story, which we'll get to in more detail. And perhaps you'll hear from the management in terms of commentary in a bit from now. But Macrotech developers and AU Small Finance Bank are the other ones that Abhishek has got his eyes on. Abhishek, back to you.
Well, Prashant, with respect to Macrotech developers or LODA, as we know, sources do tell CNBC-TV18 that they are looking to raise funds via QIP. So the QIP size could be about rupees 3,300 crores, which is at an indicative price of about 1,098 per share. This is at a discount of more than 7% to yesterday's closing price and little less than 3% to SEBI's floor price. The capital dilution would be about 3.1%, and Kotak Securities is the banker to this deal. With respect to AU Small Finance Bank, RBI has approved the merger of Fincare Small Finance Bank with AU Small Finance Bank. So beginning 1st of April 2024, this merger will come into effect and all the branches of Fincare Small Finance Bank will be converted into AU Small Finance Bank's branches after 1st of April 2024. Back to you.
Okay, Abhishek, thanks a lot for that. I recall last week we had highlighted Macrotech developers. There was big delivery-based buying out there and the stock was making a bit of a recovery. Now we know, as Abhishek tells us, they're looking to raise some funds. Well, let's wind this down. Vamakshi is joining in to tell us about some more stocks that are in the news. Morning, Vamakshi.
Well, good morning, Nigel. Let me first start off with Bharat Forge. The stock will be in focus on the back of Class 8 truck orders that have come in for the month of Feb. The total orders stood at 25,700 units. This is down nearly 9% on a month-on-month basis, but on a year-on-year basis, it is actually up almost 11%. But important to note that the Feb orders are at a 5-month low. In fact, they're down almost 6% as compared to the 6-month average orders. So all in all, on the back of this news flow, expect Bharat Forge to open in the red. We have a whole host of counters, BEML, BEL, Mithani. They are all expected to open in the green, and that is because the Ministry of Defence has inked an MOU with all of these companies, and this is for indigenous development of advanced fueling and control system for engines for particularly heavy-duty applications. So on the back of that, expect all of these counters to open in the green. And lastly, let's also focus in on Zee Entertainment. There was an analyst call yesterday, and the management highlighted that the company is a very strategic asset and is well positioned. They see significant room for performance enhancement. The revival plan by the management team is already being put into action, and in fact, this is to accelerate growth as well as enhance profitability for the company. In fact, in an interview that was published yesterday, Mr. Puneet Goenka also said by FY26 they're aiming to achieve nearly 2,000 crores worth of EBITDA for the company. So on the back of this con call, expect the entertainment to open in the green.
All right, thanks a lot for that. Well, lots of stocks in focus. Here's a quick recap in case you missed out on any of them. Stocks with positive news flow: Tata Motors, Macrotech Developers, AU Small Finance Bank, BEML, BEL, Mishra Dhatu and Zee Enterprises, while stocks with negative news flow: IIFL Finance, DCB Bank and Bharat Forge. But there's so much happening outside the equity markets, especially in asset classes like Bitcoin, like cryptocurrencies rather. But Manisha Gupta is here to give us the roundup of all the action in the commodity markets overnight. Manisha, hi, good morning.
Well, thank you for that, Sonia. Absolutely. There are two headlines from the space right now. One is from gold, where we have seen the prices settle in the global markets at an all-time high of $2,126 an ounce. It has been a very strong gains. We've seen last 2 weeks actually building up for this. The markets have seen decline in US data and expectation that you could be looking at a rate cut in the month of June, and that has led all the bulls coming in. The surprising factor clearly comes in from the cryptocurrencies, where we have seen 8 to 9% of gains overnight, with Bitcoin now trading at around $68,000. All-time high has been at around $69,000. The interesting part is that you have the equity markets and gold and the cryptos all running up at the same time, and a lot of support and a lot of money clearly flowing into all of this.
All right, Manisha, thanks very much for that. So that's the action from commodities and, of course, crypto, the crypto world as well. Thanks very much, Manisha, for that. We'll take a quick commercial break here. We'll come back and we'll connect with Hemang Jani. We'll talk about some of these individual stocks and how they're expected to react. And, of course, we'll get you more of that IIFL story in a bit from now. Stay with us.
Welcome back. You're tuned in to Bazaar Morning Call. Well, there are a lot of brokerage reports that have come in overnight, and Sudarshan has done a lot of reading. He's here to share us a few of those brokerage calls. Morning, Sudarshan.
Morning, Nigel. So I'll start with Kotak Institutional Equities on Adani Ports. It has a buy rating and target is raised to 1,520 from rupees 1,400 per share. It says monthly data suggests healthy growth when most companies are struggling due to Red Sea issue. It sees prospects of a faster increase in realization, especially at the Mundra port. And on back of all these, it has increased FY24-26 estimates by 4 to 5%. Next is Kotak Institutional Equities on Eicher Motors. It maintains sell rating and target is rupees 3,100 per share. It expects Royal Enfield domestic volumes to moderate in FY25. And it has given a few reasons of that. First, demand saturation in richer states where Royal Enfield has a market share of more than 10% and increase in competitive intensity, and companies also facing affordability issues. UBS on Siemens, it has a neutral rating. Target is raised to 5,000 per share. It says large project orders to stay strong and transmission segment is looking promising. Weakness in short cycle orders is transient and medium-term prospects remain firm. It expects exports market for power transmission. It says it also appears to be strengthening. Last is CLS on IT.
So sorry, apologies. We'll just come back to you. That IIFL conference call is actually on, so we just want to cut across to it for a bit. Listen in.
And obviously the audit team is more conservative, and their assessment many times can be lesser in terms of qualities and what branches and the sales-oriented people do. What RBI, so I know last year we had 18.89 lakh cases of disbursement, out of which 82,000 cases have gone for auction. RBI has just taken the sample of auction, the samples that were sent to auction, and obviously there the variation can be higher because these are the cases which are defaulted. So there can be accumulation of mark-to-market interest, and the quality difference there will be higher. So their point is, because the net weight, what is done by our internal audit team, is a notional weight which is adjusted, where the physical weight is adjusted for the quality. Their point is that if they take the net weight, which is audit team post facto has certified, then there is an LTV breach. We have taken corrective action to make sure that the differences are minimal in terms of the assessment of gold that branches have done and that the audit team does. But I just want to make, again, one point is very clear, that the time of disbursement at the branch level, based on the branch assessment which is given to customer certificate, there has not been a single case of LTV breach. So the deviation in assigning and certifying purity, net weight, sanction and auction, and breaches in LTV, they are all connected points, and they are basically, as I said, based on the net weight done by our audit team when the packets go for auction, which is adjusted for quality. Based on that, if you calculate, then probably you'll find that the LTV is breached. Because what branches said 22 carat, post facto audit says 20 carat, obviously the value will be lesser. But in any case, we are putting in stronger systems in place to make sure that these deviations are minimal. Also, I just want to bring to everybody's notice that all our packets, most of our co-lending partners open each and every packet, and they make their own assessment of quality and the weight. The second point is related to cash, which is in excess of statutory limit. Cash far in excess of statutory limit. So we have been disbursing and collecting cash up to 2 lakh rupees. Whereas RBI's point is that your disbursement cannot be more than 20,000 rupees based on certain sections of Income Tax Act. Now, the Income Tax Act interpretation is a little not clear, and different people have different views on that. And every NBFC, almost every NBFC in the industry is giving cash up to 2 lakh rupees. And also, but nonetheless, we are just putting in, we are making sure that we comply with this also, and we stop the disbursement of 20,000 rupees as soon as we are allowed to do the first disbursement. The third point is about standard auction processes, where last year from October we followed e-auction by Auction Tiger. Now that is an independent platform which is also used by large banks like SBI and Bank of Baroda. We thought that a taluka level auction, because when we got almost 3,000 branches across the country, smaller talukas, practically may not be feasible to fetch the best price for the customer. And e-auction, which is in a way a transparent mechanism to discover price and get the best price for the customer as well. Nonetheless, RBI circular has been very clear that the auction should be taluka level, and will make sure that we comply with that also. The third point is about lack of transparency in charges. The only charges that, we have charges mentioned in our customer receipt as well as in the website. But this confusion arises from one charge. So when we actually send notices to customer about auction, we charge 200 rupees. And many a times customers will pay and the auction will be averted. So then they are not charged anything extra. But if the actual auction happens, then there's a charge of 1,500 rupees. But this extra 1,300 rupees is charged only when the actual auction happens. So RBI's point was that even if auction has not happened, you are charged 200 rupees. But there is auction notice or auction intimation charge, which is also RBI requires us to send these notices physically. So these are the legal and the courier costs that we try to defray by these charges.
All right. Well, that's Mr. Nirmal Jain stating out the facts with regard to what's going on at IIFL and how they plan on coming out of this particular issue. So we'll keep cutting back to him as and when we get further commentary. But let's get in our market expert, Hemang Jani, who joins us on the show. Hi, Hemang. You heard Mr. Jain, what he had to say. Clearly, RBI has gone ahead and wrapped them on the knuckles with regard to their gold disbursements. Your view on the stock, because it's going to be under pressure today, and also your view on the other gold financiers, namely Muthoot and Manappuram, if there's a preference among them.
Sure, Nigel, very good morning to all of you. Clearly, this has come as a major setback. Remember that regulatory action has been there, and they seem to be in mood to kind of clamp down on many lenders. Unsecured, we saw about 4 to 6 months back, and now on IIFL Finance, two or three things I would like to highlight, Nigel. One is that, the vulnerability of IIFL Finance when there is an immediate, RBI diktat to stop the business. The other unsecured part, anyway, because of the earlier action, there is going to be a bit of a slowdown. So with this action, there is going to be impact. It's very difficult to quantify the extent because we do not know how long this, action will be in force. Secondly, the thing is that the market was working very high growth expectations when it comes to, lenders like IIFL Finance, about 25% AUM growth and a similar growth for NIM. So there is going to be, some sort of a degrade, downgrade, and that will surely have an impact on the overall, stock price. And we think that you could see about 10 to 15% kind of an impact on the stock in the short run. Once it's settled down and we have more clarity, we will be in a better position to take a call. It remains one of the better managed companies with good asset quality and credit costs. But I think near term there is going to be an overhang. As far as other gold finance companies are concerned, we think that both Muthoot and Manappuram, the numbers were not so encouraging. There are always gray areas when it comes to numbers and quality about Manappuram. So for the time being, we would avoid this space.
For the time being, you'll avoid this space. Okay, got it. Let's do one thing. Let's take a little bit of a breather. Hemang, just wait by. We have a management joining in, so I do want your thoughts on that. Wind energy stocks like Suzlon, Inox Wind were under pressure yesterday. If you remember, the Ministry of New and Renewable Energy is bringing back reverse auctions for auctioning wind power capacity. Now, to discuss more on this U-turn, so to speak, we have Devansh Jain, the whole-time director of Inox Wind, joining us now. Devansh, hi, good morning. Can you tell us about this latest policy U-turn on the auction process for wind capacity addition tenders? What does this really mean for the industry and how would it impact the sector going forward?
Hi, good morning, Sonia. So, first and foremost, this is a broad draft order which the government has sent out to certain central bidding agencies. Having said that, fundamentally, what is important to note is that until now, all auctions which were carried out for RTC, hybrid, and FDRE, which is fixed dispatch renewable energy, all of them are under the reverse auction mechanism. What the government had said, and to date, only one such auction has taken place as recent as last month, was that plain vanilla wind bids they would do under closed bidding. That was the aim. Having said that, let's not forget 80% of the demand in the market is coming from RTC, hybrid, FDRE, and the retail and captive markets. Now, when the first plain vanilla wind bid came out last month, closed bid, firstly, it was undersubscribed. And secondly, the tariff bid out was about 4.24. Vis-a-vis prevailing tariffs of about 3.2, 3.5 across RTC, hybrid, and FDRE. So you have to be competitive. Yeah.
Got it. But why is the industry participating lesser in wind auctions?
Because frankly speaking, there's almost 18 gigawatts of tenders out there which people have won, which they've participated, which are hybrid, RTC, FDRE, and a huge amount is being set up under captive and C&I requirements. So, and there's a huge shortage of supplies and more so turnkey execution. So frankly, if you ask me honestly, I don't even know how people are going to fulfill the 18 gigawatts already in the public domain. Forget more and more coming in.
Okay. Devansh, hi, good morning. What you're saying, what you began by saying is that 80% is already being put out and being handed out as via the reverse auction route. Is that correct, Devansh?
That's right. That's absolutely right. All RTC, hybrid, and fixed dispatch renewable energy tenders over the past 15 months have all been under the reverse auction route. And they continue to be under the reverse auction route. So frankly, this is just a theoretical thing which has really happened.
Okay.
I mean, the ministry announced this a year and a half ago, but to date, only one such tender took place last month, which was also undersubscribed.
And of course, I mean, that is 80% of the overall volume which is being put out in terms of tenders, volume of orders.
That's
okay.
Right.
That is significant because that is kind of that, general understanding is that there was an announcement which was made, but as you say, that they'll move away from reverse auctions. But you're saying there's only one tender which has been put out so far.
And obviously, if you look at the publicly available note from JM Finance, They say to date, under close bidding, approximately 250 megawatts has been awarded. That's it. And look at the potential. We're talking of a 500 gigawatt renewable target, 175 being wind. We're at 43. We need 17, 18 gigawatts in a year. I mean, we're talking of 6 to 8 gigawatts in FY26. Frankly, this is absolutely irrelevant.
But Devansh, is it possible that the government essentially wants lower tariffs? I mean, is that directionally one can say that?
Look,
Yeah.
as I mentioned, until now, all these 15, 18 gigawatts bid out have all been between, say, 3.1 to about 3.5. This is RTC hybrid FDRE, right? So frankly speaking, when the entire 15, 18 gigawatts has been bid out at 3.1 to say 3.5, which is a very competitive tariff, gives a very decent return to banks, IPPs, discoms, OEMs, everybody. You can't have one odd random tariff bid coming out at 4.25, etc. It's not logical and sustainable.
All right, Devansh, we'll leave it at that. Yeah, thank you for explaining that to us, Devansh. Appreciate your thoughts. Well, that's the word coming in from Inox Wind, but let's get back. Hemang Jani is still sitting with us, so let's get his view on a couple of names as well. Hemang, the other big story is Tata Motors, right? The demerger of the passenger vehicle and commercial vehicle business. Do you think a lot of the news is in the price, or do you see the stock go well above that 1,000 rupee mark in the near term?
Yeah, so Sonia, as we all know, Tata Motors has been one of the best performing stocks in last 1 year, has actually outperformed. And also, time and again, the management through their analyst meet had indicated their desire to simplify structure, the guidance of the net debt part, and the fact that on the EV side, they've done commendable work. So I think surely this has come as a positive surprise in terms of the structure and the focus that we would have on the PV business and the JLR part. Of course, CV business will have its own cycles. I do think that this is a positive signal, but since the stock has done so well, I don't see a reason for upgrading the earning estimates which are already there. So a little bit of pop, but not something that will materially change the stock price, at least in the near term.
Okay, all right. Hemang, I also wanted your view on Z. Z has been under big pressure post the call-off of that merger with Sony. Now, the management is guiding for very good times ahead. At around 150 rupees is the bad news in the price, so you think they still have a lot of challenges. You have competition that's hotting up as well, so it'll be very difficult for them.
Nigel, my take is that in the best of the times when we had the broader market, the mid caps, even the large caps going so well, Z has been a jinx stock, and more importantly, given the manner in which this entire development has happened, and the fact that the corporate governance issues have been something that the market is not comfortable with. So any guidance that the management gives at this point of time would be taken with a pinch of salt. I think we have many better ideas to look at, both in terms of mid caps and large caps. So we would surely avoid Z at this point.
Okay, all right. Hemang, we'll come back to you for more in a bit from now. Anuj is here with what he's making of the market and the setup. Anuj, morning.
Morning, Prashant. Well, it's the March factor which is at play right now. And the March month in election year is always like this. It brings with it some kind of traits related to possible election play. And it's no surprise that PSUs have started to move once again. Not PSU banks, but PSUs like BHEL, NTPC, etc. yesterday. Many more order announcements, etc. are likely before the elections are announced. And after that, of course, you have the code of conduct which comes in. And then perhaps you see some profit taking. And the market is rewarding you if you're staying with the trend instead of trying to preempt what could move next. The best example is Tata Motors, which, of course, could be one of the stocks of the day. I mean, if you look at what's happened with Tata Motors, whether you look at a 6-month chart or a 12-month chart, staying in a trend has really been rewarding, has made you a lot of money. 6 months, it's up 62%. 12 months, it's up 130%. Just, I think, the most consistent chart. In the setup, there are a couple of interesting things that I want to point out. First is FI exposure in the index futures. We've started to see some long build-up and some short covering, and that positioning is once again moving towards the neutral zone. And in the index options, what really stood out was the data on the put side. The put longs were covered and put shorts were added, which tells you that the market perhaps has downside capped and the upside could be opening up. In terms of levels to watch, the first resistance for Nifty is 22,450 to 22,521 based on options and all-time high zone. And then chartically at 22,574 to 22,637. Of course, support is always more important in a trending market. So you have first support at 22,300 to 22,350 and then 22,150 to 22,200, which is a 10-day exponential moving average zone. The bank Nifty is very interesting because it started to outperform the Nifty and Nifty IT over the last fortnight. This month alone, where we haven't had too many days, the Nifty Bank is up 3%, the Nifty IT is actually down 1%. The Bank Nifty is playing a catch-up. It's still down about 3% from its previous highs. That's where it's perhaps making a move, despite no contribution from HDFC Bank. The first resistance is 47,760 to 48,030, and then 48,200 to 48,500. Support comes in at 47,150 to 47,250, and then 46,850 to 47,000.
All right, Anuj, thanks a lot for that. Let's take a quick break. On the other side, we'll connect with Sudarshan Sukhani and Kush Bora for a quick technical check of the market. Stay with us.
Welcome back. There's 7 minutes to go for the pre-open session. Sudarshan Sukhani and Kush Bora are with us with what they want you to do as far as this morning goes. Gentlemen, great to have both of you here. It's a very individual stock-specific market, and we'll talk about individual stocks in a bit. But the broad thrust direction for the indices first. Sudarshan, let's start with you. How are we set up?
Well, the indices are at new highs, but yesterday was a very narrow range day. That tells us that at least for the time being, even the longs are either waiting for a consolidation or not willing to take long positions for a few days. So for today, that narrow range day can break on either side. It can break on the downside, on the upside, and it's quite possible that we can see a two-way move up and down both. So it's likely to be choppy and volatile. The trade is still to be a buyer, but there's no rush. You have to wait for a significant dip towards 23,200 to go long in the Nifty. And almost the same view applies to the Bank Nifty, where you wait for sharp dips. A narrow range can create volatility for the next day, that is today.
Okay, Kush Bora is also joining into the conversation. Kush, hi, good morning. It's been record highs for the market, but there are record highs across the board, right? Whether it's gold, Bitcoin, etc. So that makes you a bit jittery at this point. But tell me, what about today? What's the plan of action?
Sure, Sonia. First up, a very good morning. Well, markets are hitting a new highs, but there are only three people smiling, right? You, me, and Nigel. I mean, we always do. See, the point is the base has shifted higher for sure. 22,200 was turning out to be a resistance. It's now a very firm support zone, which is confirmed technically and also from the options data that we are seeing. But what's also happened is the resistances are getting stiffer. So the buy on dip strategy continues. There isn't a case, at all for going short. So I would agree with Sudarshan to some degree that 22,200, 22,300, if the markets do come down to those levels, a good idea to add, fresh longs. Otherwise, maintain your positions with trailing stop losses. A couple of points that I'd like to add. There are certain setups and indicators that we track which usually suggest, peaking out, which as they did a couple of weeks ago. Now they're hinting at a pickup in momentum in the coming week. So what we're looking at in the mid cap and the small cap space could very well be like a lull before the storm. And the second is that once the rally pans out, we could also be looking at a near-term peak. But more on that later, as and when we get there. As far as Bank Nifty goes, I think fresh longs can be created here as well. There's a lot of catching up to do. 48,000 plus kind of targets, and 46,900 turns out to be a very good support.
What about individual stocks? What are we looking at? Okay, we'll do one thing. We'll take a short break on that note, Kush. We'll come back in a bit with the pre-opening rates and the stock ideas from Sudarshan and Kush. We'll also have Mahantesh Sabarar and Prakash Diwan to put focus on the Tata Motors demerger that has taken place into two separate listed companies. Stay tuned. Welcome back. Hope you're having a good morning so far. We're here to give you some stock ideas for the day as you begin a brand new day of trade. And Sudarshan Sukhani and Kush Bora are sitting with us. Sudarshan, let me start with you. So many stocks in focus, right? There's Tata Motors, there are these defense stocks, PSU names, etc. What tops your list today?
Well, there's so many stocks, so you really you could pick and choose. For me, it's Zydus Life is a buying opportunity. The stock had a 50% rally, and that rally is likely to continue. It's breaking out again. Stop under 920. Trent is a buy. Again, that big rally, a large range bar was made about a month ago. Stop under 3850, and you can consider buying it. PVR Inox is an intraday short. It's in a bear market. That's not good in this kind of an environment. Stop above 1410, but remember, keep it intraday. And LIC Housing Finance has an excellent chart of a consolidation, which should be preparatory to another breakout on the upside. Buy with a stop under 648.
Okay, all right. Thanks a lot for that, Sudarshan. Kush, what do you have for us?
Couple of stocks, both of them on the buy side, Nigel. Lupin is on a strong footing. Did give a breakout yesterday after a long bit of consolidation. So 1700, 1740 would be near-term targets. 1640 would be the stop loss. AB Capital, this stock also has gained momentum, although a bit volatile, but the trajectory is not. So 194, 198 would be my targets. 187 where I would keep my stop loss.
Okay, all right. Those are the stock ideas. Well, let's do one thing. Let's get back to talking about Tata Motors because the pre-opening rates are going to be settling in right now. And let's see how Tata Motors is going to react because there's this demerger of the passenger vehicle and the commercial vehicle business that has happened. So there you have it, 10% higher on that stock. Of course, this is a big positive because finally they have demerged the two entities and now there will be significant value unlocking for shareholders. Let's talk about what brokerages are saying. UBS says that this simplifies the structure, but they don't see any material value unlocking from here on. They believe that a lot of the good news perhaps is in the price. Morgan Stanley says the demerger reflects confidence in the passenger vehicle business being self-sustaining. JP Morgan says the demerger might lead to better value discovery, while InCred says that the sentiment may improve via corporate action, but no major change is likely in the business. Now, if you look at the ratings as well, right, most brokerages continue to have an overweight on the stock. However, UBS has a sell with a target price of 600, so they're quite bearish over there. Morgan Stanley has an overweight with a target price of 1,013. JP Morgan has an overweight with a target price of 1,000 rupees. And InCred has a reduce with a target price of 639. So let's get Mahantesh Sabarad, independent market expert and someone who's tracked the auto space for very long, to join us on the show. And we also have Prakash Diwan on the show. We spoke to him yesterday about what the potential of this could look like. Gentlemen, thanks a lot for joining in. Mahantesh, let me start with you. How will the two listed companies look like post the merger? And for shareholders at this price, is the risk reward still favorable?
Good morning, Sonia. So firstly, Tata Motors, this is a scheme of arrangement, not really a demerger. The demerger of the passenger car business had happened a couple of years ago, if you remember. So what we're going to have now for the shareholders is actually, I would call it a split actually, because the current share will have two new companies with mirror shareholding. So the shareholder will get actually two new shares and it becomes akin to a split. But the fine difference is that you will now be having the passenger car business separate and the commercial vehicle business separate. Probably what will therefore do in terms of value unlocking is that the commercial vehicle, which was either to sort of getting overwhelmed by the poor profitability of the passenger vehicle business, will start gaining better traction going forward, and the passenger vehicle business will have a great future ahead in terms of the EVs coming in. But let me also tell you one thing. There is a small negative here. You have the TPJ Group investments in the EV business, passenger EV business that was announced in 2021 thereabouts, would mean that there will be a small, they will get shares swapped into the new passenger vehicle entity, thereby reducing the overall shareholders, shares.
Oh, okay, that's interesting. Okay, let's get Prakash Diwan also into the discussion. Prakash, the passenger vehicle business, right, has been the key focus area for them. And that's seen a remarkable turnaround after 2020. I mean, the market share in the passenger vehicle business used to be in mid-single digits, and now it's almost 13.5%. We also know that EVs, the market share is over 75%. So for someone who has Tata Motors shares at the moment, what do you think the value unlocking could be now that the second entity will have the passenger vehicle business, where there will be a further breakdown given of JLR as well as of EVs? So how do you think the structure will look from here on?
So to begin with, Sonia, there's going to be a little bit of, the outcome is going to lead to a bit of simplification. You'll also have the DVRs getting extinguished over the next few months, 6 months maybe on the outer side. And that kind of gets out of the way. So a lot of ownership that hasn't translated into the underlying stock and continues to rest in the DVR will kind of see ownership come into the underlying businesses. And to answer your question on the split between the PV and the CV, right now the CV part contributes about 18% to the revenue, not necessarily the profitability, but this will mean that eventually the passenger vehicle business could almost be valued at what the current Tata Motors stock price is, and you would get the CV business in addition to that. It's very similar to some of the splits that we've seen in the recent past, where Reliance gave out the Jio shares in equal quantity, and how value unlocking has happened. So I would believe, and remember, there are, as you rightly said, there are very different multiples that both these businesses will attract. The precedent is from Daimler. Daimler did this in 21, and just to give you anecdotal data, 2022, they were valued at 80 billion euro. Today it's at about 145, just 2 years after effective demerger. So it's the passenger car business. So this will definitely unlock value, but it'll take some time. It's not something which is going to happen next quarter. Right now, the key steps will be deleveraging of the balance sheet, and I think the company is confident of doing that, and hence doesn't want the JLR debt to sit in any of the, become an overhang in any of the businesses, especially the CV business. So this will be carried the way it has to be carried by the PV business, and that too is at a very minuscule level since it's been coming down gradually.
Okay, all right, Prakash noted that. Hi, Mantesh. Good morning and good to see you. And Nigel on this side. Do you think this is a step in maybe listing one of the other two businesses, maybe the JLR business or the EV business? So this is like a makeshift arrangement, and then at some point of time you'll see this happening. That's my first part. And the second part is on the JLR business, I think looking at most brokerages, they're giving it a value of close to 2.5 times EV upon EBITDA. That's not cheap, if I compare it with the global peers. Will it get a higher multiple?
Good morning, Nigel. So firstly, on the JLR, whether it will be a precursor to eventual JLR listing, my belief is no, because you already now have a sort of direct link into JLR with the passenger vehicle business listing as a separate entity. So that's number one. Number two, as far as JLR receiving a low multiple is simply because the growth potential for JLR may be great in the luxury vehicle segment, but the EVs, the electric vehicle companies across the globe are really eating into the luxury car market, and where JLR is quite frankly a little underprepared. Therefore, you would see perhaps the lower multiple, and over and above that, you also see that JLR has to do a lot of catch up in terms of R&D spends to get its product portfolio right, particularly on the EV side now going forward. And that spends being very large will mean that the debt overhang will continue to remain. While the company is guiding that they will soon be debt free this year or so, or 12 months down the line, but from a cyclical perspective, they will still have to take on more debt on the JLR side. And let's not forget, as far as the EV is concerned, when the JV was formed, or a separate company was formed with TPG Rise investing in it, they talked of a total investment of $2 billion. Now the investment so far has been close to only $1 billion. So there will be additional $1 billion coming into the passenger vehicle business, which could mean the value for the existing shareholder will get diluted as we move ahead with the new $1 billion raise.
Oh, okay. All right. Got that. I wanted to press on that TPG point, but it's an interesting one, but we are completely out of time, so maybe we'll have you back on. But Mahantesh, Great to see you back on the air here. Thank you very much for joining us. Appreciate it. Prakash, thank you very much as always for being here with that perspective. There's about 8 minutes to go for the market open. Less than that actually. And I think we'll get to the open with lots of stocks in focus in just a bit from now. Nifty is down, 34 points or so. This is at the end of the pre-open session. Let's just put up the Tata Motors stock as well and see what's happening there. Maybe, there you go, 4% pop, 1,027 on Tata Motors is what you have. And then maybe IIFL Finance is the other one, right, in the pre-open session. Where is that ended at? So these are all first rates coming through. That's a 20% cut. That's a big one, 478. And maybe just look at the insurance names as well, Max Financial and maybe an HDFC Life, which of course was reacting to our story from yesterday, which we will revisit in a bit from now. But we have Sudarshan with us with his 910 call. Sudarshan, what do you have?
Well, LIC Housing can be considered for buying with a stop under 648.
Okay, all right. Sudarshan, thanks very much for that. LIC Housing is the pick at 910. But today's Momentumizer, what's on the stock board? Vivek is here with that list. Vivek, hi, morning.
Well, good morning. You can't look past BHEL, the kind of move that the stock has been seeing, so significantly, strong volumes as well. The volume action in the last couple of trading sessions has been very strong over there. So let's have a look at just, how the price has moved. Stock up for 5 straight sessions. Along with that, in the last 5 sessions, the stock is up close to 20%. Now, this indicates that in 2024, the stock has gone up by 37%. And this is on the back of a 3.5 times rally that the stock has seen in the last 1 year. So the upside that BHEL has been seen has been significantly high in just the last 1 year. Talking about technical parameters, stock is comfortably trading above the 50, 100 and 200 DMA. What's led to the strong rally? Number one, BHEL, while execution has been a bit patchy, what's actually aided the kind of up move in the stock has been the kind of capex that park companies are seeing in terms of thermal capacity addition, and this has, BHEL has been the significant beneficiary of this in terms of very, very strong ordering momentum. So in FY24, robust order momentums over 56,000 crores, and also yesterday's NTPC Singrauli thermal plant, where company is the sole and the lowest bidder, is something too that should come into BHEL kitty. So watch out for this stock in the coming days as well.
Okay, Vivek, thanks a lot for that. Vivek, but you're also tracking IEX, and that's one of the top stocks for us to track today. Tell us more.
Well, absolutely. So IEX has come out with the February monthly update. So good volume activity over there. February overall volumes are higher by 15.5%. That's quite significant, indicating that the company has gained market share. Along with that, what's transpired is the fact that sell-side liquidity has actually gone up quite significantly as well, almost 47% on a year-on-year basis. On the back of that, clearing prices are lower, but remember, IEX mainly gains on the back of higher volume activity. Other than that, last week we had reported how there was changes as far as, late payment charges were concerned from DISCOMs, and IEX says that they will be the beneficiary of the fact that Gencos will now have to go ahead and give unscheduled power on the short-term exchanges. So IEX says that they see improved volume activity coming in from there as well. Of course, the overhang remains the implementation of market coupling.
All right. Thanks a lot for that. But IT companies are under pressure this morning. Rima is here to tell us about a CLSA downgrade that has come through on the companies. Rima, over to you.
Thanks so much for that. So CLSA has downgraded TCS and HCL Tech to a sell from an underperform, and they reiterate their sell on Wipro and LTI Mindtree. Here are the reasons. One, the recent outperformance. Since November of 2023, which basically means for the last 3 to 4 months, the Nifty IT index is up 23%. It's outperformed the Nifty by nearly 10%. This is because of softening of the US 10-year yield, improving demand commentary from US hyperscalers, and plus the hype surrounding Gen AI. But despite that, when the global IT services companies like a Cognizant or a Capgemini, EPAM, Globant, when they reported their numbers and gave a guidance for calendar year 2024, it didn't reflect all the optimism surrounding AI and generative AI and the improvement in demand. The guidance by the global IT services company, we're not talking about NVIDIA, we're talking about the Cognizants, Capgeminis, EPAM and Globants of the world, continue to remain fairly muted. Another reason is that the IT valuations are now at 28 times forward multiple for Nifty IT, higher than the average of about 22 times. And they're saying that, the street estimates are still on the higher side, and therefore there is a downside risk to earnings estimates for FY25. And they believe a mid-single digit revenue guidance by HCL and Infi in April of 2024 would be a negative catalyst. So according to CLSA, we're perhaps not looking at a double-digit growth next year on the top line, but a mid-single-digit revenue growth. And that would be a negative catalyst. Back to you.
All right. Rima, thanks very much for that. I mean, so you got, what, 30 points lower on the Nifty. You got the sensex, which is down 100 plus points. Yesterday was absolutely quiet. So no follow through from last Friday's big 350-point move. And this morning, I mean, at least the start is going to be a little softish. We've got just a couple of seconds to go for the first trades to start to show up. And it's a market made up of so many stocks which have got which are moving around, and some of them sharply so. This morning, of course, as the pre-open showed us, IIFL Finance will be in focus, Tata Motors will be in focus, and many others as well. So the first rates are there, 22,380, and you've got the sensex, which is at 73,770 or so. And I think you've got the Bank Nifty, which is also coming up. Bank Nifty, by the way, inched up slightly. We're down 150 straight at 47,291 or so. So that's the start. It's slightly lower. 50 points down in the Nifty, Sensex down about 160. Mid-cap and small-cap indices, I think, are starting slightly lower as well. Small-cap index yesterday was down 0.5%. So we'll be interested to see what happens through the course of the day. But Sonia's got more rates. Sonia.
Well, thanks a lot for that. As you pointed out earlier, Tata Motors is really the big stock in focus, right, on the back of the demerger that was announced. So as we speak, Tata Motors is up almost about 3%. You have the Tata Motors DVR that's also looking pretty good. So the last time I checked, that was up almost about, I think, 2% or so. The Tata Motors DVR will come up in a bit. But apart from that, I of pressure right now. RBI has directed IIFL Finance to cease any gold financing business. So that is extremely bad news for the company, almost about 20% odd. Macrotech Developers has been gaining quite a bit of ground lately. To launch a 3,300 crore QIP. So that stock is in the green. Rima was just telling us about how CLSA has downgraded some of these IT names. So TCS, HCL Tech has been downgraded by CLSA. From an underperform, so both these stocks are under pressure right now. Adani Ports is also in focus this morning. Kotak has a buy, and they've raised their target price on Adani Ports to 1,520 from 1,400 earlier. And some of the other names in the defense space like BEL, BEML, Midhani are all in the green as we speak. The Defense Ministry has signed an MOU for development of advanced fueling and control systems. So all of these stocks are in focus. Midhani is the other one that I am looking at. Well, IEX is up about 0.2%. The overall volumes in Feb have gone up 15.5%. So looking pretty good there. Godrej Properties, once again, this entire real estate space has been doing well. It has emerged as the highest bidder for a land parcel in Noida with a revenue potential of 3,000 crores. So keep an eye out on Godrej Properties. Zee Entertainment had an analyst call yesterday where the company said that the revival plans are being put into action and they aim for 2,000 crores of EBITDA by FY26. But the street doesn't seem to be convinced, so the stock is absolutely flat as we speak. But other than that, you'd have to say that the Nifty is giving up some of its gains. It's now down almost about 70 odd points. Nothing alarming, but I think the pressure is seeping in from the Nifty Bank. And also what's happened with IIFL Finance is a little bit of a, sentiment rub-off over there. So 20% lower on IIFL Finance. That's the big headline of the morning. Back to you.
Thanks a lot for that, Sonia. And, we mentioned in the morning chat itself, if IIFL Finance is going to be under pressure, that they can't disperse any gold loans, then, in fact, there could be gains for Muthoot, whose yield is close to around 18% approximately, and Manappuram at around 22 to 23%. And both of them are flying away in today's trading session. So you have gold prices itself that were higher overnight, and then also you have someone's pain is someone's gain. And it appears, at least as of now, Manappuram and Muthoot, if I'm not mistaken, both of them are making fresh 52-week highs in today's trading session. So those stocks are flying away. In VBM, we had some positive news that came in overnight. So that's one of the top volume gainers in today's trading session. It's up close to around 8.5%. SBFC Finance, that's another big volume mover today. That's up close to around 4% as we speak. On the flip side, you have Aavas Financiers. That stock has lost close to around 6.5% in today's trading session. BHEL, my colleague Hormuz had highlighted that yesterday we saw a big up move, but it wasn't backed by big delivery-based buying, because the delivery percentage was down to, I think, the early teens, 12-13% approximately. So that stock is giving up some bit of what it put on yesterday. So yesterday it had a big move on that one. So that's down close to around 1.5%. What else is doing well in trade today? Well, you have Tata Motors DVR is outperforming Tata Motors. That's because there appears there's a bit of a pair trade that's taking place. That's the Tata Motors DBR, you buy that, and you short the Tata Motors stock. There's a bit of an arbitrage gap, even as of now, of close to around 5%. That's narrowing down a little bit and explains why the DVR actually is outperforming Tata Motors in today's trading session. And we have reason why Aavas Financiers is under pressure. 13% equity has changed hands. So that's the reason why that's down close to around 6.5%. Prashant.
You know, Muthoot is up 10%. Manappuram is up 6%. And I just sort of wonder if this is on the back of, these are the oldest gold finance companies, right? I mean, around, especially Muthoot. And highest quality. Now, the point is, if the IIFL news is really, of course, it is helping both these companies. And Muthoot, for example, has told us many times, because over the last couple of years, the big issue has been competition. And Muthoot, the management has told us many times that, it's not an easy business. You can start it, but there are intricacies and nuances involved. So while everybody, of course, in terms of competition, banks and other NBFCs all jumped into the space in a big way, the steady commentary has been that eventually things will, it's not the core sort of players perhaps have a big advantage because they've done it so long. And of course, there are zero complaints in that sense, right? They've done it for decades now. Now, the other question, though, is it a bit overdone maybe, 10% on the back of this? There is, of course, the big rally in gold prices over the last couple of days as well. And there is a strong correlation between gold prices and, gold finance companies. There are things working, but 10 and 7%, we'll see if these gains hold as we go through the rest of the day. Just a few other names, before we go any further. You've got... let me just quickly look at the market breadth. By the way, 1:1 is what the market breadth now stands at. So it's kind of evened out. Tata Chemicals was up 2%. Just a few other names. 1,025. Gensol was limit down 10% yesterday. It's starting about 5% higher. Castrol is up 2.5%. SBFC, that is Small Business Finance, recent listing, 4.5% higher. GE Shipping is coming up with a 3% pop. So lots of action, by the way. Right out of the gates. BEML, Garden Reach, NBCC, these are all up in the range of between 2 and 3% at this point in time. So that is the overall picture. Aavas Financiers is down 5.5%, 1353 on Aavas Financiers. And maybe there is a Suzlon, which is down 3%, GICRE, which is down 2%. And of course, we've been highlighting what's happened to IIFL, which is limit down about 20%. Or so, but more stocks. IIFL Securities is the other one, by the way, which is also down about 7% or so, 142 on IIFL Securities right now. Max Financial Services is down 2% or so at this point in time. Ajay Srivastava is with us, Chief Executive Officer at Dimensions Corporate Finance Services. Ajay, good to have you with us here. Thank you for your time. Just if you want to start with the news around IIFL Finance and, of course, some of what I was saying with regards to gold finance companies, especially the rally today on Muthoot and Manappuram.
Well, I think, as I said, this is the second curveball to the investors by the Reserve Bank of India at the end of the day, because banning a business means that a lot happened before that. And I think that's a worrying point for investors, is that there are no warning signs from either the companies or from the Reserve Bank of India telling the people, listen, this company's got problems. Till your final sledgehammer arrives. So I think all it tells us is that I think the middle class or the middle scale NBFC space is at serious risk at this point of time, because any regulatory action is now coming in the end, which is banning the business or taking the license. So I think from investor standpoint, more than IIFL, more than gold finance, I think the story is now emerging that there are serious regulatory risks running in the mid-cap space of NBFCs at this point of time. And one needs to be cognizant of it, that today it could be a gold loan, tomorrow it could be the share advance against shares, the after could be the LAP loans, which are the most popular loans. So I think broadly speaking, Prashant, I would say that from purely in a regulatory action standpoint, the NBFC space, the mid-cap NBFC space is now at a serious risk of being invested into by people and holding on. The cuts are deep and large. So I think there will be a move gravitating towards the larger NBFCs at this point of time, which are of strategic importance. NBFCs, their RBI can't do what it does with this smaller segment. And I think the lesson here is just not the gold. I think the lesson here is that the mid-cap NBFC segment, I think it's a serious investment risk, is the regulatory aspect coming to play. So, well, some of the companies will get better of the gold people because if IIFL Finance goes away, the volumes will move to somebody else at that point of time. And it's a business which requires daily people walking in and giving their gold to take the money. So it's not something which will transition over time. So I think the benefit to others is going to be immediate, absolute, and starting to today itself. So to that extent, share price reflects what's going to happen. And but I think broadly speaking, from investing standpoint, mid-cap NBFC space, I think is now becoming a minefield. Next one, which one blows, one doesn't know.
Okay. Well, Ajay, hi. Good morning. You know, I want to talk about Tata Motors because it's hit a fresh record high right now. And it's not just about the demerger now, right? I mean, if you map the trajectory in the last 3 to 5 years, in fact, ever since N. Chandra came on board as the chairman, a lot of positive steps have been taken in Tata Motors, whether it's deleveraging of the balance sheet, making sure there's subsidiarization of the businesses, getting a specific, vertical heads to come on board, and now finally the demerger. Do you think there is more value unlocking from a shareholder standpoint? If someone has missed the bus, is there more to go?
First of all, you never miss the bus. I think the world is round, the bus will come and pick you up again. So don't worry about missing the bus. I can tell you that much. All right. And I think I sincerely believe that I think two things. One, due attributes to the chairman. I think he has transformed the Tata Group in a manner which investors have not seen. And I think that's the energy which was required has been brought to the fore and addressing the capital market. Number two is, you never miss the bus. This is just the beginning. It's a flyer at this point of time. I'm not saying buy the shares. I just believe you hold it as a holding for disclosure purposes. But the fact is that the company became profitable after a decade in the last 1 year. That's one. Number two is, we underestimate the importance of JLR. Those brands are serious brands in the world of SUVs. They are premium brands, which are where the market is today in the global market at this point of time. So, we don't talk about it too much because we're discussing Marutis, etc. But I think those are serious global brands and underestimated, undervalued by India. I think there's a great story building here. I think it will be a global story over time that India will have a global leading car company listed in India. I think it's a great story. It's just the beginning. Don't worry about it, guys. People who are very young, don't worry. You've not missed all the boats. The real one is still to come. It's going to be a flyer in my view. I'm not saying buy the shares. Our view is a global car company in India. I think it's going to be a great day. And a lot of people undervalue what happened at JLR. Those brands are serious.
Okay, all right. Hi, Ajay. Good to hear your thoughts on the auto space then. But if I'm not mistaken, I think you were quite positive on the ferrous names as well, the steel stocks. And, the near term, there could be some pain, but it appears the street is looking ahead because most of these stocks are at 52-week highs. What's the view from here on?
See, they have withstood huge amount of imports at this point of time. I think that was the biggest challenge in steel has always been imports. It's not about whether you can produce at a good price or sell at a good price. There is enough demand in this country. The issue has always been, can you withstand the power of imports? And I think they have done that. A little bit of tariff support here or there, and they can again go, beautifully higher. So to that extent, you got companies which take capacity build-up takes years to come in this industry at this point of time. And with the fewer players, none of them are showing any sign of price cutting in the market. Very mature, very good dealing in the market at this point of time. Nobody is fighting for market share by dropping prices at this point of time. So I think demand side, infrastructure, etc., remains robust. And on the supply side, their cost competition, they have been done a pretty good job in terms of capacities and best point, deleverage. These were heavily leveraged names 5 years back. Look at the balance sheet. Beautiful balance sheets now, deleverage. And guess what? The capital market, that's what gives the trigger to these stocks. Today, if they want to raise capital, they can easily raise a QIP in about 2 weeks' time. And that gives a fresh leg up to these companies, which require capital quite frequently to deleverage or borrow and projects, etc. So I think the setup is beautiful at this point of time. Now, tariff can change. If you take away some of the tariff barriers, they can get hit. If you put something, they can fly. But the point remains, they are strong players with beautiful balance sheets compared to the last 5 years back when they were weak players with bad balance sheets. And that gives us support to the fact that in the next 5 to 10 years, if India has to grow at 8% or 7 or whatever number you pick and choose, they will have a market.
Take all of that on board, Ajay, but what's the pick from here on? The call has gone right so far. From here on, what would you buy?
See, here on, we have made a call very clearly that India will be a story of defense stocks. Okay, for the next decade, I think defense will give a 10-bagger very clearly wherever you invest. It doesn't matter. There are not many companies to invest, and lots of smaller names come out and at this point of time, and they have And yesterday also one or two names became a unicorn in the market, which are old names. If you remember, I have the holding, but I can disclose Zen Technologies became a unicorn yesterday. So I think India, if our defense budgets are not going up drastically, 6 to 7%, matching the inflation, which means they have to buy Indian stuff at this point of time. And once they buy it, the spares make all the money. Maintenance spares make all the money to come in. So I think one single story is defense is going to be a biggest one for us at this point of time. And the second one, of course, is shipbuilding. I think there India has got a very small market share, is going to be a big share. So put together that and the supply of raw material chain, I think you're in a very safe end of the market. You don't have to worry whether the customer buys a Colgate toothpaste or a Promise toothpaste. These are longer term, much better ones.
Okay, all right, we'll leave it at that. Ajay, thanks a lot for joining us and speaking to us about individual stocks and the market as well, which, by the way, is very quiet right now. It's a tad bit soft, you'd have to say, but nothing alarming, just a little bit of a negative bias. Let's focus on Star Health and Allied Insurance. The stock has been an underperformer. It's down 4% in the last 1 year. In terms of a Q3 performance as well, their net earned premium went up about 16% year on year. The underwriting profit declined 9%. To talk more on their business momentum and outlook, we have Nilesh Kambli, who's the Chief Financial Officer at Star Health and Allied Insurance, joining us now. Nilesh, thanks a lot for joining in. Can you tell us what was the growth that you saw in the net earned premium in Q4? And what is the expectation both in terms of retail as well as the group portfolio growth going ahead?
Thank you for having me on the show. So on an overall basis, we continue to grow at 18%. What we need to see is the growth in the gross return premium, which is growing at a healthy rate of 18%. On the retail side, we continue to maintain our market share of 33%. So we are growing more or less in line with the market. On the group side, we are growing higher than the market growth rate. Market is growing at 21%. We are growing at 26%. So we see a healthy growth across our business lines.
Okay, so you said retail market share is 33%, and on the group side, you're growing faster than the market. You've seen a 26%. Okay. What is the target between the retail and the group mix over the next 1 to 2 years? What would you see as the mix?
So we are focusing on the SMA business, medium corporates as well as banker group business, which is the non-employer-employee groups. So with 48 tie-ups now, we are confident that we should be in a region of 8 to 10% when it comes to group business in the next 3 to 4 years.
So group business will be 8 to 10% of your overall business in the next 3 to 4 years.
Correct. Currently, it's hovering around 5 to 6%. So the group will grow faster than the group rate.
Okay. And the standalone health, just to talk about the health industry overall, the health insurance industry, it's grown at an average of 23 to 25%, while your business has grown at 16%. Just trying to understand why it's not growing in line with the industry, with the kind of market share that you have, and what is the expectation overall?
See, when you compare growth, one needs to compare GWP growth rate. So GWP, we are growing at 18%. Some of the other SAHI players are growing in that range of 23 to 24%, but this is largely driven by group health business. When it comes to retail business, as I said, we are growing in line with the industry growth rate and maintaining our market share. Some of these players are small. We are 3.5 to 4 times of some of the smaller players. So considering our size, we are growing very healthy.
Okay, all right. You're satisfied with your growth, and Mr. Kamble, we take that 18% odd that you're giving us. Two-part question now. Any price hikes that you have planned? Point number one. And also, what is the targeted combined ratio? And give us a timeline as well with that.
See, price hike in the continuous process. We continue to evaluate our various products and the loss ratios. In the next 3 to 4 months, we are looking at a price increase of around 10% of our portfolio, anywhere between, around 15%. Range. In terms of combined ratio, as we mentioned earlier, we don't want to give a guidance in terms of combined ratio, but yes, in terms of ROEs, we want to maintain an ROE of 19 to 20% on an IFRS basis. So that's our medium to long-term objective, and it should be possible starting next year as well.
So ROEs of 19 to 20%, what is it at currently?
So currently it should be around 15 to 16%. I'm talking about IFRS basis. Deferment.
Got it. Yes.
Mr. Kamble, just good morning, Prashant here. Just a slightly sort of qualitative kind of a sort of aspect here. Are you, in terms of that issue back, I think a few months ago with hospitals, etc. In Gujarat. I mean, generally, have you kind of done do you feel there is a need to kind of do a sort of, audit across your partners, etc., to figure out whether there are too many claim rejections, etc., happening company-wide in different geographies, etc., or you think that's not necessary? You put that behind and you kind of strengthen systems.
No, see, evaluation of hospitals, monitoring of hospitals is an ongoing process. We manage more than 15,000 hospitals. So in the last 11 months also, we have around 800 excluded providers. Where there are some issues, we have excluded them from our cashless facility. We continue to work with the hospitals. The business that we have grown, we have been talking about quality business in preferred locations. What it has done is it has not only helped us in controlling the claims ratio, but it has also helped us in reducing the rejections because there was more noise created from this area. So it is helping us in both ways in terms of reduction of claims ratio as well as reducing the noise. Our reductions also in terms of claims have reduced as we see for 9 months. So overall, it's going on really well, both in terms of relationship with the hospitals, the claim reductions, as well as the claims ratio.
Because, I mean, that is essentially your partners, right? I mean, and if there is generally, a little bit of unhappiness on that side, and there is noise, as you say, about claim rejections, etc., I mean, that is not good for business over a long period of time. So you're saying, it's all under control, and you've kind of looked at that.
Absolutely. We continue to track our NPS also when it comes to claim settlement. We are seeing an improvement trend when it comes to NPS for us. So overall, it's going on really well.
Okay. All right, Mr. Kamli, we'll leave it at that. Thank you so much for joining us and taking us through the business as well as the way forward for the industry. We'll slip into a quick break. On the other side of the break, Amit Agarwal of DCM Shriram will be joining in to talk about their entry into advanced intermediates, and later we'll connect with B. Bhaskar Rao, the Chairman and Managing Director at Krishna Institute of Medical Sciences, to talk about the Supreme Court's order to consider central government health scheme rates. Stay tuned on that.
Welcome back. Quite a few stocks moving around. The stock is up close to 7%. Big up move is what we're seeing on that name. I think Piramal itself, I think it's a large trade that's taken place out there. So Piramal Pharma is another name. That, but at around 9:30, there was a Crow shares that did get traded on that one. For the time being, let's focus on DCM Shriram. The company's board has approved epoxy resin and downstream products with a likely investment of close to around 1,000 crore. To discuss this and what's the impact of this development, Mr. Amit Agarwal, the Executive Director and CFO at DCM Shriram, joins us on the show. Well, give us the rationale behind this. You're going to be setting up this unit. One, well, it's a commoditized unit, this epoxy resin. But also, I think it could serve as backward integration. So fill us in.
Yeah, so see, there are two purposes for which epoxy. One, as you rightly said, we are very uniquely placed to have complete forward. We start with caustic chlorine, where we are implementing our, and then we'll get into epoxy, and then getting into further value-added products, which will be like hardeners. So that's the idea, that be in a complete value chain. See, also is that currently the chemicals business is into caustic soda chlorine. Now we have epichlorohydrin, hydrogen peroxide, epoxy, and the value-added that DCM Shriram will be into. So that's the purpose and the objective behind entering into epoxy, which serves as a platform.
Tell me, what is the current production in India for epoxy resins and what will your capacity be here at over the next 1 to 2 years?
Yeah. So current capacities in the country is close to about kilotons per annum. And the demand today in the country is close to about 300%. So that's the market. And what was the other question?
So your own, from your production potential, I assume this 10% demand that you spoke about is in India?
We should largely be able to meet domestic gap itself because, as I said, about 200, 250 tons. And therefore, we should given that, this globally, this product is growing at a pace. And given its, its qualities such as lightweight material, it's into coatings. So I think it has a lot of growth potential. It has uses in industry, in automobile. So I think there is a lot of scope for growth in this business.
Mr. Agarwal, hi, good morning. I mean, I think in early January, the government of Gujarat to invest some 12,000 crore rupees. Could you tell us, give us a little bit of details? Is this a broad agreement or, what stage is this?
Where we have given our intent that we want to invest 12,000 crore. Also, we have invested about 6,000-7,000 crores in Gujarat in last, I would say, 5-6 years. So the intent is that invest that kind of an amount in next 3 to 4 years in Gujarat. And then epoxy is one of them.
Okay, so that's the 1,000 crores, right? Which you said.
Yeah. So we are in the process of more land, and therefore we will set up more projects in Gujarat.
Okay, and which segments is this investment going to address? What are you looking at? If you can give us a sort of invested. I mean, you'll have to take it up to a board for some firm resolutions, etc. Right?
Yes.
So all of that will happen.
All of that will happen over the period of time. Currently, we are looking at primarily it will be in the chemical space.
Okay. Right. Amit, give us a few more details. Out of this 1,000 crores you're looking at spending, for this epoxy unit, what is the asset turn? By when will it get commissioned? If you could brief us on that.
The asset turn will be in the range of around 1.75 to 2. And it should get commissioned in next 30 to 36 months.
Okay. And you want to break that up for us?
It's too early to do that, right? But generally, we equity, so probably 60% equity, 40% debt.
Okay. What is the debt on the books right now?
See, that was as of 31st of December. But as of 31st, about 1,800 crores kind of number.
1,800 crores of debt as of 31st of March. So you have, do you have any plans to bring down your debt, or do you think that because of, this, is there a potential of the debt going up further? What is the level that you'd be comfortable at?
By all norms, it's very comfortable. That is point number one. Second, there is seasonality in sugar business as well as urea. So there is March, but average is going to be much lower, and that's the reason why you see that's not throughout the year. It's more of a lot of it is working capital. And so therefore, I don't think that there is any challenge. And the other thing I want to highlight is that a lot of that debt is for the projects that about to start. So we've invested close to about 3,000 crores in chemicals business, and commissioning is yet to start. So, the debt is there, but the returns have not yet come. So I think it'll all even out over the period of time. It's pretty right.
Mr. Agarwal, there is weakness which continues in the chemicals and the vinyl business. Could you give us an indication if there is any price, demand recovery, etc.?
Not really, not at this stage, right? There is still surplus globally, as well as, especially in chemicals, there is surplus in India. So we have not seen any respite, and we're not seeing any respite for next couple of quarters. But as far as DCM Shriram is concerned, given that we have multiple other businesses which also contribute significantly, like Shriram Farm Solutions, Fenesta, Sugar, and all these businesses add up to close to about 700, 800 crores of EBITDA. So I think we are placed pretty comfortably.
All right, we'll leave it at that. Thanks a lot for joining in. That is DCM Shriram. They're looking to invest in epoxy resin. They also see a 10% growth in the demand for epoxy resins, and they're going to invest 3,000 crores in terms of capex in the chemicals segment. Well, that's a chemical player. But I think in a bit, we'll also get a hospital company to talk about, the standard procedure rates over there. That happens in a bit. But for now, for the market, Tata Motors really is the stock of the moment. 6% higher now. It's a fresh record high on Tata Motors. The stock has crossed the 1,040 mark, and in terms of the move this year, Tata Motors is now up 35% this year. It's doubled in terms of a stock price in the last 1 year, and the Tata Motors DVR is also seeing a big bump up. So, that is really the big stock on the upside, and on the downside, you have IIFL Finance, which is the one that is under pressure. But let's put focus now on ABB India. During our interaction with the company in our special segment Inside Out, Sanjeev Sharma, the MD and CEO of ABB India, told Sonal, my colleague, that they expect a strong business momentum to continue. They also add their market segments have expanded significantly in the last 7 to 8 years. Listen in.
Portfolio helps the government spending as well as the private spending in that area. So as far as we are concerned, earlier, many years ago, there were only few market segments which were active and relevant in the country. But now, I would say about 7, 8 years, about 8 market segments were relevant for us. Today, they have expanded to 23 market segments. So that means the market has become much more broad-based. And the traditional market segment, which still are very attractive for us, they are sub 10%. But some of those market segments are now joining the growth story. Data center, as an example, is a very reason everything in India is working, is getting digitized. That has to be served by data centers. And it has good transaction. Government is moving all their services. So happened in other countries. I think India is at the starting point of data center revolution. So there's an expansion of data centers across the country. And I think it has just started in the last few years. Countries, it has a long way to go, and it will only become larger. More power will be required, and also government wants company as well as public data should be localized. So I think it's a plus $1 billion business. Last year we crossed 10,000 crores in orders, and this year we have crossed 12,000. Jump you see there. And then our backlog has expanded by 30%. So if you take it forward and you take that same momentum, and Indian market is looking quite good and is becoming more and more broad-based, more sophisticated, I believe we have every confidence to see that this journey continues.
Okay, well, it's an interesting conversation with the management of ABB India. Now let's talk about the hospitals space, right? Because a lot of debate, discussion after the Supreme Court has told the centre was regulate and standardize procedure rates across the board. Stocks have taken a hit, anything between 10 to 12%. We've, of course, been speaking with a host of players from the sector to understand the implications of this. So let's continue with that. We have Mr. B. Bhaskara Rao, Chairman and Managing Director at KIMS, that is Krishna Institute of Medical Sciences. Sir, good morning. Great to have you with us here. Prashant this side. I think investors want to understand, is this, first of all, of course, is this going to be possible or not? That is number one. But we can't there's no way to know till something actually fructifies. So then, people want to know if this were to happen in some form, what are the implications? What is the impact going to be for the hospital sector in terms of profitability? Your thoughts, sir?
Prashant, good thing. I think a lot of debate is happening in the healthcare. See, basically, first of all, the Clinical Establishment Act says only three important things. One, the patient quality care. Second important thing is the display of the prices. Third important thing is the patient rights, whether they are being displayed so that tomorrow they can able to question anyone. These three things are there. This has been acted in 2010 in the central government, and most of the state governments has adopted. The only thing is, if you want to come out with a plan of pricing, they need to have given us some guidelines. If we follow that guidelines, it will be a scientific way of preparing this tariff. Now, that tariff is going to be 30 to 40% what we are charging today excess. So that's why they could not able to come forward and say, basically the expenditure that they taken from ward boy and the material cost and the power cost, the taxes cost and everything you do it. There is a way of, if you are able to charge like that, today there may be a 30 to 40% up of the prices what we are charging today. So it is very difficult to implement because there is so much of complexity of the treating a patient. Same patient will have a comorbid conditions will be different. A patient doesn't have a comorbid conditions is entirely different of the outcomes and the long stay and the number of investigations we do. Now to see ease out for the patients, we are trying to make it as a package so that we can able to give a lower price. The only
Mr.
concern,
Rao?
right? Yes.
Yes, I totally understand, sir, that, there is, of course, there needs to be a middle ground that needs to be found at the moment. But until that happens, because of the uncertainty on what the rates would be, do you think that the entire industry could cut back on their capex plans, would wait for a while before putting fresh money to work, considering the uncertainty that we're seeing in terms of these standard procedure rates?
I don't think so. If they implement the standard procedure rates, it will be good for the hospitals, one. Second important thing is the healthcare is required and needed. And maybe it doesn't take more than 6 months to 1 year to come out with a clear-cut guidelines, what needs to be done. Till the time, some of the people may able to, may not start the new ventures, but whatever is the existing things has to be completed.
Oh, you're saying you're in support of what the court is saying? Sorry, you said that it will be good for hospitals.
If it is, if they can implement, it is very good for the hospitals.
In terms of, and we're talking about benchmarking it to CGHS rates. That is what you're saying.
You can't be able to mark into the CGHS rates. Basically, there is a CGHS rate. There is a Ayushman Bharat rates, there is a state government employee schemes, all are, we are doing a very, very subsidized. 50 to 60% of the subsidized rates when compared to the cash and insurance. If all parameters comes same, then it will be, patient will get benefit, hospital will get benefit out of it.
Mr. Rao, fill us in with the basic detail then. What is the payer mix as of now? Government, institution and cash insurance. What is the mix for you?
Usually it varies from the organization to organization. We have about 80% cash and insurance. 20% is the other like Ayushman Bharat schemes or state government schemes, Arogya Bhadrata schemes. These are all, we are very, very low price than to the cash patients.
So then that 80% comes under risk, right, sir? If the rates have to be dropped and they have to be standardized, then that could be a risk to your business. Explain to us why you believe it's not.
If that 80% is going to implement the rates and it is unviable to the organization, no organization will be able to continue. Then we need to be able to discuss, come out a plan where the healthcare is very important for the public. And as well as it is creating a more employment in the country. So we
Mr. Rao, right. Mr. Rao, got it. No, this is absolutely quality healthcare is, it's the court says fundamental right for people. and at an affordable price. That's understood. Now, so what is the most likely course? Do you believe, I mean, how are hospitals and yours, I'm sure, sort of talking to the association, etc., are you, is it going to go through the court route? Because the court has given the centre 6 weeks, or will a high-level committee be formed, and then, you will sort of put forth recommendations, discuss, and something will come out of that? And what's the timeline we're looking at, sir, for some clarity?
So we are planning to do now, the media associations will go and first approach the government and see how far it is going to be feasible, what is the next step. Simultaneously, we are also pleading into the court and say that this is not unviable. Either you should be able to give a scientific basis of pricing rather than putting a CGHS rates, because CGHS rates has been done about 10 years back. It is totally unviable for any organization. But we are doing because they are giving some volume, which is not the case in the cash patients and insurance patients is concerned.
Now, the hospital industry has got a lot of investor interest in the past couple of years, right? Whether it is from venture capitalists, from PE investors, etc. Do you think that institutional interest could dip or financial interest could dip because of the lack of clarity on these rates?
See, basically, whenever the investor is seeing, he wants to see the risk-free investments. So when this has come, they don't know how, or anybody doesn't know as of now, how it is going to shape. So that then they may also have a little bit of apprehensions whether we should be able to further invest, or we'll wait till the concrete idea comes from both the government and from the court and from the institutions. Definitely, it is a natural phenomena for anyone who invests and wants to make money out of that. Then they will also see the risk of this entire journey of what's happening today.
Okay. Mr. Rao, we had more questions, but we're out of time. So perhaps you will come back, in a couple of weeks' time and tell us what are the discussions with the association and what's the latest in this matter. Because, I think a lot of interest around how this goes on from here. But good speaking with you on CNBC TV18 today. Mitesh is with us with his 10 o'clock trades and what he's making of the market action. A little subdued, a little lower, Mitesh.
So again, Prashant, it's a quiet kind of a day. But, as I said, I think the market doesn't look weak to me. I think closer to about 22,280 to 60 zones is where good support comes in. So anything close to about 22,300, I think I would want to take a long over there with a 50-odd point kind of a stop. On the stock side, LIC Housing Finance is something which is, looking interesting. It's on the verge of giving a good, strong buy signal. So here take positions with stop below levels of 652 and a target of 690 can be looked at. While IT names are under pressure and HCL Tech has had a gap down. So a sell here with a stop at about 1632 and a target of 1580. Disclaimer, HCL Tech is already a recommendation to our clients, so there is vested interest.
Okay, all right, Mitesh, thanks a lot for that. Well, brokerages are taking note of the CNBC TV18 story on life insurance stocks, where we learned that insurance regulator IRDAI may back down on surrender value proposals. Yash is joining in with more details on the same. Yash, over to you.
Well, Sonia, yesterday is when we reported about, the insurance regulator considering rationalization of its proposal on higher surrender value. There are a certain interesting brokerage comments which have come as far as that particular story is concerned. To start with, Morgan Stanley has written a note on that particular development and CNBC TV18 story. They say that CNBC TV18 story on considerations with respect to the surrender value is in line with what they had expected. Final surrender value, according to them, the regulations there are likely to be non-disruptive as far as the sector is concerned. For them, HDFC Life will see the maximum impact since the draft paper on the surrender value was released by the insurance regulator. That was around December 2023. Along with that, Morgan Stanley also says that HDFC Life is the preferred pick for them on a favorable outcome of as far as the surrender value is concerned. Other life insurance companies are also likely to benefit if there is any favorable outcome that comes out of this thing. CNBC TV18 had also reported that the final regulations are expected to be considered by the insurance regulator in its March board meeting. There's also a note which is coming
comment from CLSA on this particular story. They say that the possibility of a watered down version of the draft regulations on surrender value is what they expect. HDFC Life and Max Life were most impacted by higher surrender value, which according to the regulator were to be paid by the life insurance companies to policyholder. According to them, HDFC Life and Max Life have about 53 and 55% of APE coming from par and non-par segments, where the higher surrender value would play its maximum impact. On the other life insurance companies, CLSA says that Max Life and SBI are delivering healthy growth, and they feel that the valuation gap between Max Life and SBI Life could be narrower.
Okay, all right. Thanks a lot for that. Well, let's do one thing. We have a listing now. It's the debut of Exicom. So let's just wait. It listed at 265. The issue price was 142. Big move coming in for Exicom Tele. The company has two lines of business, by the way. One is the critical power business, where they get 70% of their contribution, and the second is EV chargers. So electric vehicle chargers is something that has, been a big beneficiary for them. It was the first entrant. In fact, Exicom Tele was one of the first entrants into the EV charging space way back in 2019. So that's one area of expertise. And the critical power business, 46% of their revenues comes from the telecom industry. So very good opening for Exicom Tele, looking pretty good.
Absolutely. And there's one more, Platinum Industries, right? That's listed at 225 against an issue price of 171. So, I mean, the IPO market, the primary market, well and alive and kicking, really. So, doing well. Nifty, by the way, is sold off a little bit more. We're down about 75 points now. We'll take a quick break. Manisha will be here and she'll put the focus on commodities. Stay with us.
Back to Bazaar morning call. Well, shifting focus to the commodity markets, Manisha Gupta is joining in. Manisha, what's the one commodity that you're tracking today?
Well, absolutely. Settled on an all-time high in the overnight markets. They're at around $2,126. Prices have seen higher levels than that, but we haven't seen a closing on charts come in at these levels. So since the contract was created in 1974, this perhaps is the highest closing ever. Of course, when you look at the inflation all over the place and much higher than 3,000 as well, perhaps. But this is where we are trading at this point in time. As I said, all-time high that the gold prices did hit was in December 2023 at 2,135. The futures also have seen a high of 2,149. So we're slightly an inches away from those kind of levels, but the closing has been higher, and that does mean something on the charts. The last couple of weeks have seen building up in case of gold gains, and this is where we've reached at this point in time. You know, in the month of January in 2023, we were trading at around 1810 or 1820. In the first 2 months itself, we've seen very strong gains come in. The strength in gold comes in on the back of decline in the US manufacturing data, a 16th month of decline for the month of Feb, and that has been supportive. Well, apart from that, it also has to do with the decline in US inflation. The US dollar index is trading below 104. The treasury yields have seen a decline, and all of that has been supportive. What the street will watch out now for further gains is going to be the US non-farm payroll data. Well, that comes in on Friday. And then you also have the US Fed chair speaking in front of Congress. There are 2 days of those meetings there. So any statements coming in from there are going to be quite supportive. Well, you have seen the gold prices do well, even as the equity markets have been rising. The interest rates are on the higher side. The dollar index is trading at 103 as well. And this is what we've done in the last year, as I was telling you. We did see January at 1823, and we are trading at around 2,120 right now, as we've just about ended Feb. All-time high in the month of December. Then this is about futures, what was 2149, and we're just about less than $20 away from those kind of levels. So very strong bull market is what we've seen in case of gold prices. This is what we've done in sense of returns in all of these years in sense of gold. Last year was a 5% of gain, and this year in first 2 months itself, we've seen a nearly 2.5% of a jump up coming in for the markets. And there are very, very bullish signals coming in from the Wall Street banks and brokerages as well. We are trading at 2120 right now. So we are much higher than ABN AMRO, DBS and Commerce Bank expectations on where the gold prices could go in 2024, even TD for that matter. Goldman Sachs has talked about 2133, and we are trading very close to those kind of levels. And much higher levels are predicted by Citi, Saxo Bank, Exim Australia and UBS, where they are anticipating all-time highs to the tune of 2200 or even 2250 going forward from here.
Okay, all right, Manisha, thanks very much for that. So that's commodities in focus. We'll sort of look at IT stocks now, and stocks are under pressure. There was a downgrade from CLSA which came in today. Rima is here with details. Rima.
Thanks so much for that. So CLSA today has downgraded TCS and HCL Tech to a sell, while they reiterate their sell call on Wipro and LTIMindtree. Some of the reasons are: one, index since November of 2023 is up 23%, outperforming the broader market by nearly 10%. This recent outperformance was driven by softening of the US. The fact that many of the hyperscalers, like your cloud companies, basically, reported good numbers, and there was hype surrounding Gen AI. But CLSA makes the point that despite all this optimism from hyperscalers and, the hype surrounding generative AI, when the IT services company, the global IT services companies, the likes of Cognizant, Capgemini, Globant, Endava, when they reported when they announced their calendar year 2024 guidance, the outlook for this year, the guidance is still very muted. It doesn't reflect any of this, any of the tailwinds which led to the up move in the stock price. Also, the valuations are expensive. CLSA says the Nifty IT on an average is trading at 28 times forward multiple, which is above the 6-year average of 22 times. So they see more downside in the earnings estimates, and according to them, a mid-single-digit revenue guidance by HCL Tech and Infosys for FY24, when the companies come out with their numbers in April, could act as a negative catalyst. Back to you.
All right, thanks a lot, Rima, for that. Let's slip into a quick break. On the other side, our special segment is the economy. Lata will get chatting with Vinayak Chatterjee of the InfraVision Foundation to talk about the power sector. Stay tuned.